Hello, welcome to the program. Coming up today, IMF chief says COVID debt restructuring push not advanced enough. South Sudan still trying to increase oil output and refining. Kenya, Iran explore avenues of mutual economic cooperation. Thank you for joining us on Business Incorporated. I'm Ladi Williams. We kick off the midweek show with market numbers, where almost all markets we track in Africa are mostly in the red at intraday. Here on the African continent, South Africa, JSE declined 0.93%, while Nigeria's main index is marginally down 0.09% at intraday. Only the EGX 30 is actually not spared, also shaved off 0.11% at intraday. Kenya closed Tuesday session positive. And over in the Middle East, investor sentiments were also mostly negative at intraday. Dubai's index is down 1.03%. Meanwhile, the Abu Dhabi index declined by 0.65%. Elsewhere, the Qatari index shed 0.10%, while the market in Saudi Arabia is the only positive, up 0.25%. And European stocks were slightly higher in the morning as markets await the outcome of the U.S. Federal Reserve's policy meeting. For this and more and other developments in the European space, let's talk to Chelsea now. Great to have you, Chelsea. The Federal Reserve policy announcement later today is the focus, of markets and the U.S. economy and inflation pressures has picked up speed. What are investors expecting?
Well, markets have been holding steady this morning here in Frankfurt. The DAX is about flat, and investors are very much waiting for the Federal Reserve decision to not only determine where markets are going today, but this will also be very significant for the long-term outlook for global stocks. Investors generally expect the Federal Reserve today to not make any policy changes. They likely won't change interest rates. They likely won't make any comments about scaling back bond purchases at this time, but we could definitely see the Federal Reserve hint at some changes that could be coming in the coming months, in the coming years. So right now, most investors expect the Federal Reserve to not lift interest rates until 2023. We'll have to see if the Federal Reserve, in its projections for its interest rate increases, is aligned with that. And of course, this comes at a very mixed time for the U.S. economy. We've seen inflation really start to take off in the U.S., rising about 5% in the latest month, the highest level in many, many years. But at the same time, the job market in the U.S. hasn't fully recovered from the pandemic hit. There are still about 8 million fewer jobs than before the pandemic. So the Fed still has some areas where it wants to see the economy improved, but before it does start to pare back some of this stimulus.
All right, and the EU's 800 billion euro recovery fund is finally set to start flowing to member states to help them recover from the pandemic. How will countries spend this money?
Well, European countries have been waiting for this stimulus money for quite a long time now, for over a year, and it has been quite a long and dramatic process of negotiations here in the EU. The EU has named this recovery fund the Next Generation EU Fund, and really they want this to focus on projects that will sort of reshape the European economy for the future. So, in particular, they want countries to spend the most of this money on climate change efforts, as well as efforts to digitalize the European economy, a very difficult word. And that's going to be a lot of projects like building out electric vehicle networks, like improving broadband connections, investing money into hydrogen networks. So really a lot of focus on sort of these next generation technologies.
All right, the EU yesterday launched its first bond offering to fund the recovery program. How did that go down with investors?
Right. So to fund this 800 billion euro recovery program, the EU is going to be borrowing jointly for one of the first times in their history. This is a very big step for the European Union because a lot of countries in the past have been very wary about pooling together the debt of all European countries. Countries like Germany didn't want to have to pool their debt with the more risky country like Spain, but because of this pandemic, they ended up doing that, and we've seen a lot of demand on the market for these bonds already. Yesterday, the EU launched their first 20 billion euro bond sale. They actually got orders for over 140 billion euros worth of bonds, so there's about 7 times as much demand for these bonds than there were available. So that's a good sign that there's a lot of interest in what is mostly a safe European assets, because the EU still has a lot of bonds to sell to fund this recovery.
All right, Chelsea. Thanks for the update. Always great to talk to you. Thank you. All right, in the UK, inflation has risen over the Bank of England's targets for the first time in almost 2 years. Let's see how this is driving sentiment in intraday and in London with Juliana. Great to have you, Juliana. Inflation data, that's what's majorly on the lips of many in the UK today. You know, widely ahead of expectations. The rise in inflation is no doubt a blow to those relying on cash savings for income, with UK interest rates pegged at a record low of 0.1%. Where does this leave the Bank of England in its policy decision?
Well, as you said quite rightly, Laddie, good afternoon. We are waiting to see how the Bank of England responds to this. Inflation, yes, it has dominated economic discussion over the past couple of months. And even though the Bank of England did forecast that interest rates would go above their target of 2% before the end of the year, I don't think anybody was expecting it to be as quickly as this, coming in the month of May at 2.1%. Economists are kind of put a figure of about 1.8%, and it could go much further. I think all eyes now are going to be on what the central bank in America release in their meetings. I think Jerome Powell is due to have a press conference any time now, but it is a concern. However, there are some, like the banks, who want a rise in interest rates. 0.1% has meant that it's been incredibly difficult for them to be profitable, especially during the pandemic time when they put aside so many impairment figures. So, unfortunately, the buzzword for the moment is wait and see, and that's exactly what we're going to have to do.
Wait and see. Well, how are the markets responding to this data at this time?
Yeah, the FTSE All Shares had a pretty good week. We were seeing pre-pandemic levels on Monday and even yesterday. Today, it's hold on to some of those gains, but of course, that inflation figure has pulled down some of the blue chips because so many of them readily rely on the dollar, and the pound is doing incredibly well at the idea of interest rates rising. So a lot of the mining stocks, American-focused stocks, have been down, but all in all, a pretty good day on the All Share. The FTSE All Share is up 0.10%. The FTSE 100 is up by 0.14%, and the FTSE 250 is up by 0.35%. In the currencies market, the British pound is up against the US dollar by 0.25%, up against the euro by 0.33%, and also up against the Japanese yen by 0.14%.
All right, great to see the pound is up today. Well, in another news, Cristiano Ronaldo's removal of 2 Coca-Cola bottles during a press conference at the Euros has coincided with a $4 billion fall in the share price of the drink giant. Why would Ronaldo do this to Coca-Cola?
Well, I can ask him over the Instagram DMs if you like. I don't know. Nobody knows. But I think, Laddie, it's got something to do with his athletics. To be honest with you, I think a cynic would say that it's about endorsements. You know, he is an incredibly rich man, and would he want something sitting next to him, a huge brand that hasn't paid him big bucks? Who knows? I'm not a cynic, but I think some people have suggested it's because, of course, you know, he's fighting fit and fabulous, isn't he, Ronaldo? And he doesn't want to promote fizzy, bubbly drinks. He'd rather promote water. Paul Pogba, apparently he tried to do something similar with a bottle of beer yesterday. Didn't really get the same kind of global reaction. But to think that all those $4 billion worth of shares was wiped off Coca-Cola's market capitalization is absolutely massive. Some people even suggested that UEFA would fine Cristiano Ronaldo. But they did release a statement saying, you know, all players have an option. They can choose whatever drink they want to drink. So really fascinating story. Big blow to Coca-Cola bosses, though.
Or maybe he just wasn't in the mood for sugar. Who knows? All right, Juliana, thank you so much. Enjoy the rest of your day.
Thanks, Laddie.
Thank you. Well, shares in Asia Pacific were mixed on Wednesday trade as investors look ahead to the U.S. Federal Reserve's interest rate decision. Mainland Chinese stocks led losses among the region's major markets, the Shenzhen component plunging 2.5%. Shanghai Composite also shed 1.07%. Hong Kong's Hang Seng Index fell 0.68% as of its final hour of trading. Elsewhere, shares in Japan were mixed on the day. The Nikkei 225 slipped 0.51%, while the Topix Index was little changed at 1,975.86 points. South Korea's Kospi edged 0.62% higher to close at 3,278. Australian stocks advanced as the S&P ASX 200 closed about 0.1% higher. And U.S. stock index futures were mostly flat in the morning ahead of the Federal Reserve's update on the monetary policy. Futures contracts tied to the Dow Jones Industrial Average were just 36 points lower. S&P 500 futures were largely flat, while NASDAQ 100 futures traded slightly higher by 0.1%. Early pre-market trading, large tech shares like Tesla and Nvidia were slightly lower, while shares of economic reopening plays, Royal Caribbean and Boeing, were slightly higher. Federal Reserve kicked off its two-day meeting on Tuesday. The central bank is not expected to make any policy moves, but it could signal that it's beginning actually to think about easing its bond buying policy. The Fed statement and forecast will come out at 2 p.m., followed by a press conference by Chairman Jerome Powell, 30 minutes. And oil prices rose in early trade, with Brent gaining a fifth consecutive session as falling stockpiles and a recovery in demand encouraged investors. Brent crude was up 69 cents at $74.68 a barrel. We've seen a 1.6% rise on Tuesday. U.S. crude gained 66 cents to $72.78 a barrel after rising 1.7% in the previous session. And gold prices edged lower this morning due to a stronger dollar as investors look forward to outcome of the U.S. Federal Reserve meeting for hints on tapering of economic support measures. Spot gold was down 0.2% at $1,855 per ounce. U.S. gold futures were steady at $1,856 per ounce. The dollar held steady near a one-month high against its rivals, making gold more expensive for holders of other currencies. In other metals, silver eased 0.1% to $27.62 per ounce, while palladium gained 0.1% to $2,765, while platinum fell 0.2% to $1,151. All right, after the break, we'll look at Africa's vaccination drive. That's our next conversation on Business Incorporated. Do stay with us. Welcome back. You're still watching Business Incorporated live from Channels HQ. To our next conversation now, outcome of the meeting, a weekend meeting by the G7 has continued to generate reactions. Oxfam is one of those that have criticized it, saying it's bitterly disappointed with the communique issued on Sunday, June 13th, which included pledges for 1 billion COVID-19 vaccine doses and to boost climate finance. South African President Cyril Ramaphosa was also at the meeting, where he had made a case for plugging the COVID-19 funding gap. Let's talk to Trinity Ngube now, an economist in South Africa. Great to have you, Trinity.
Good afternoon, and thank you for having me again.
Good afternoon. Thank you for joining us. Well, the issue of vaccine availability and funding, particularly for poor countries, was a major topic at the G7 meeting over the weekend, and a lot of people expressed their disappointments over the agreements reached. What was your major takeaway for at the meeting?
Well, it's same old, same old. We seem to still beg, the West for funds and all this type of support. I think it's a very, if I may say, it's irresponsible to be in 2021 and still begging for funds and support from the Western world. We should be in a position to do things ourselves. Without going too much into the figures and so forth, I just personally, I'm also disappointed. We should be at a stage where we should take care of our own business.
Yeah, I share that sentiment too. Well, President Ramaphosa was at the summit alongside his Indian counterpart, and both of them lead the proposal to waive intellectual property rights for COVID-19 vaccines at the World Trade Organization. What is your take on that?
Again, that might sound like a broken record. I'm still disappointed as well, because at this point, I mean, if you look back into history, the likes of Egypt had a lot of intellectual property. Look at medicine, engineering, and all these scientific, fields. So for us at this point, decades, centuries later, we're still begging for intellectual property. We have bright young scientists in Africa. Almost 70% of Africans right now are in the youth. And these people have ideas, they have innovative ideas. And the problem is that the innovation ecosystem is highly politicized in Africa in such a way that we are unable to do our own things.
And obviously a lack of investment in research and development, I guess.
That too. However, again, we should get our story straight. We should get our house in order. We cannot rely on other countries to support our own innovative, ecosystem and processes. At this point, we can have support, but at some stage we should be having our own African innovation ecosystem in which we can, be dependent on each other as African states. We have highly capable scientists in this region.
All right, so we've seen the emergence of a third wave of COVID-19 virus in most African countries like South Africa. Aside from the availability of the vaccines, hesitancy has also been identified as one of the challenges. Can this be attributed to low trust in the authorities?
I think, again, based on what we have been talking about today, if you rely on somebody else to give you something and you're not quite sure whether that thing is safe, again, you as a beggar, you can't be a chooser. So we are dealing here with an issue of quality, the quality of vaccines. Some of the vaccines might obviously been expired. Some of the vaccines might have question marks. And now we wait for the FDA in the United States to tell us whether it's safe or not. I mean, this is just a big joke.
All right, so low vaccine rollout is set to also hinder Africa's growth prospects this year. What is your outlook?
So that's the one positive I could pick up on. The economy at the moment, especially in South Africa, was doing quite well. So we're looking at growth prospects around 3.1%, I mean, between 2.8 and 3.1%. And I fear, though, that would be dampened down by maybe 0.3 to 0.5%. Let's see how it plays out. It also depends on how long these lockdowns, restrictions that we announced will go for and the kind of impact that they will have. I doubt that they will have such a significant impact over the next 3 months. So I'm looking at still about 3.1%. I'm a fairly optimistic person. Let's see how it plays out.
But for you, what do you think can, build trust, when it comes to this hesitancy issue?
Well, again, I mean, it's an issue of collaboration with other countries. And again, our authorities at this point, I normally hesitate to point the finger at government, but you see, the issue is when these vaccines are bought, there needs to be coordination between the Ministry of Health and, of course, some of the municipalities and so forth. And at the moment, we are in chaos because I doubt that we even have a Minister of Health at this moment.
Wow. All right, Trinity, I guess we'll have to leave it there now. Thank you so much for your time on the program. Thank you.
Thank you again for having me.
All right. Meanwhile, efforts to restructure unsustainable debt burdens in some of the world's poorest countries has not made enough progress. This is according to the head of International Monetary Fund, Mr. Lina Georgieva. Speaking on webcast, the IMF's managing director said some progress was being made in Chad, which, along with Ethiopia and Zambia, has become a test case for a global debt relief plan known as the Common Framework. According to her, more was needed. A cornerstone of the Common Framework is that private sector banks and investment funds match G20 governments in agreeing to either write off or postpone repayment on money they have lent to strained low-income countries in the past. The fact only 3 countries have utilized the program so far reflects government's worries. However, that the process of defaulting would lock them out of international borrowing markets for an indefinite period of time. And Kenya and Iran are exploring ways to expand economic cooperation between the two countries, especially in the agricultural sector. Iran Chamber of Commerce, Industries, Mines and Agriculture hosted a meeting with the Kenyan trade delegation on Wednesday where the two sides pointed to barter trade using the capacities of the local banks, overseas agriculture and participation in joint exhibitions as ways to expanding the level of trade between the two countries. Expressing satisfaction with the holding of such meeting as a way of paving the way for enhancing level of cooperation between the two sides. Deputy Head of International Affairs at the Iran Chamber of Commerce, Mohammad Reza Kabasi, says Kenya is one of the most important economies in East Africa and plays an important role in the region's agriculture, fishing and fishery industries. According to him, Iran can meet Kenya's needs in the field of oil derivatives, bitumen, petrochemical products, health, tourism, medicine, food. Kenya, on the other hand, can meet the needs of the Iranian market in the field of cocoa, coffee, tea grains, as well as food and livestock products. And South Sudan is seeking to ramp up oil output, build refining capacity in an enduring effort to revive an economy that has suffered from war and a global pandemic. Oil production, accounting for nearly all government revenue, has plummeted. And operators of nature fields in the northern Upper Nile region have stopped investment. South Sudan's oil production has declined by half from almost 200,000 barrels a day in 2014, according to Energy Intelligence Group data. And Africa-focused Tullow Oil plans to increase the volume of oil it protects with hedging to 75% of the company's output for the next 2 years, with plans for a further 50% increase for a year beyond that. The oil producer had previously hedged around 60% of its output 1 year into the future and 30% in the second year. In a statement ahead of its virtual AGM meeting, Tullow's chief executive, Rahul Der, said that after a year of significant change, Tullow had emerged as a new company with a fundamentally different approach. Mr. Der said the company has reduced its debt levels and have sold its interests in Uganda, Equatorial Guinea, and Dussafu Marine Permit in Gabon, raising over $700 million in proceeds. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams from the team. It's bye for now.